market is the most overvalued by far. For the first time, it's everything. It's real estate, it's crypto. I mean, there's nothing that's not bubbled, okay? And real estate's the worst. Stocks, it's good to get out ahead, but if you don't see it and you see that first 40% crash, which kicks your ass, what you wait is for that 50% retrace and get out just down 20%, and you're not that bad. Real estate's not that way. Real estate starts going down and then it just locks up and you can't sell anything. And again, I lecture all over the world. The other thing I get a huge flack for is saying real estate's going to go down. Harry, you don't understand. Real estate never goes down. They're never making any more of it. We've got a global population bubble. Yes. But we got the biggest. And I mean, there's not even a real estate bubble comparable to this in all of history. This is way more unique for real estate than it is for stocks. Stocks have bubbled many times, and yes, they crash, but they come back fast. Real estate, the 2006 peak, which came before the downturn, happened because the bubble had gotten too big, and it took 6 years to bottom, 4 years after stocks, okay? So real estate is going to be the real humbug and danger for most people. And people are going to think, well, I'll just sit it out. Well, you're going to have that home for the rest of your life, what age you are, to sit it out. What really happened was that we predicted in my early books that by the end of 2007, the giant baby boom generation would have peaked in their spending cycle, the largest in history, and we would go into a long downturn, 2008 through 2022, due to the baby bust. Gen X, fewer and fewer people to drive our economy. But what happened once we crashed in 2008 and early 2009, once that deepest crash since the Great Depression started, governments pulled out the printing presses for the first time and said, you know what? We don't have to have recessions anymore. We can print money and cancel them out. And $27 trillion later, we had the greatest stock market boom ever, precisely when the fundamentals, both in the demographic generation cycle of spending and ultimately from 2020 forward, another technology cycle we have that's very powerful, when the cycles were at their worst in history. So what I'm saying now is we skipped over a depression. And number one thing you got to look at history. Depressions follow bubble booms. Recessions follow normal business booms, okay, and consumer booms. So we basically blew our way out of a bubble burst. And you know what they did? They just created a bigger bubble. 2009 to 2024 now has been the longest, greatest bubble in all of history, times 2.5. Okay, most bubbles have never lasted more than 5 to 6 years before they blow out from their extremes. But when the government's behind it and throwing trillions and trillions of dollars at it, so I don't 100% know what's going to happen here, but I know we can't get away. And I think this bubble is now going to burst probably between here around early 2025 and 27. And most major downturns take 2 to 3 years in the stock market, including the Great Depression from 29 to 32. That was 2.7 years stocks crashing. I think we're going to see this crash now. I don't know exactly how it's going to work out because it's never happened when things are more favorable. The millennials, basically, the reason that this massive tightening over COVID did not hit the economy harder, as everybody expected, was because the millennials stepped in with their big boom starting at the beginning of 2024. So we have positive demographic forces after 12, 13 years of negative from Gen X, but we created this giant bubble. And as you said, the biggest debt bubble, and debt bubbles always drive financial asset bubbles. You won't see those two without each other. So we have to shake out this financial asset and debt bubble. And I think it's going to be painful in the next few years. They may put it off a little longer, but I don't see how we go ahead without having to deal with this. If this is a bubble, which it is, and it's the first everything bubble in history. I've studied bubbles now all the way back, as far as there was financial markets in the late 1700s. What's the biggest bubble out there today? It's freaking Bitcoin. Crypto is a new emerging financial asset innovation, a giant one in history. It's in its early stages, and that's where you have bubbles when the technologies are new and have all this promise. But since you can't quantify it, and since people don't understand how much resistance there is to new change in technology, people blow it up and make it worth more. Just same thing with the internet. The first bubble was around the internet. Oh, the internet's going to change everything. It did, but it's still overvalued. It still had a major crash, 78% stock crash during a boom. So that's what happened. So we've had this second bubble, and now it's been stretched. This bubble has got to crash. It has to bring down these financial assets and all these things that only weigh on the economy now. And then we will have the next boom. But in the United States, our millennial generation only has strength into 2037, not as long as or as much as the baby boom did. And then it plateaus out forever, for decades. But I mean, we're not going to see ever in this country a boom like 1983 to 2007, which again, by all this stimulus and bubble, got extended to here recently. Okay. We'll never see this again. Bubbles come in 90-year cycles. You look back 1929, and then you come into this era. 2019 to 20 would have been the natural peak in this bubble cycle. You go back before then, 1836 to 42 crash. The bubble bottoms, 1842, 1932, and then recently 2022 are 90 years apart. And we didn't get to have this 22 bottom because governments stimulated their way out of this. So I think that bottom's going to come later. But the point I make to people, I learned this early in my career because I majored in economics in college. And after the third course, I'm like, these people can't predict anything. They don't understand it. And I'm like, why am I studying this? Well, I did my research on the side while I was consulting to businesses, new ventures, seeing a new economy emerging in its early stages while the old one was peaking. So I was at Bain & Company consulting to Fortune 100 companies, the old, and then I ended up consulting to new ventures in California, seeing the new economy. So I just dug in and did my own research. And guess what? The economy is incredibly predictable. New generation peaks, 1929, 1968, 2007, 39 years apart. Technologies come. 2 waves of technologies come every 45 years, about 22 years apart from each other, So, and new technologies come in slowly into niche markets. And then in the same time it takes them to go to 10%, they go to 90% adoption, like automobiles all of a sudden did in the roaring 20s, and microcomputers all of a sudden did in the 90s. So all of these things that people say, well, nobody could have seen that coming. No, wrong. You may not know exactly what it is, but you can see when these cycles are coming. And that's why I was standing on a rooftop in the early 80s saying, people say the US is dead and Japan's going to take over the world. And I'm like, no. We got the biggest damn baby boom in the world, and we're going to be the ones kicking ass, at least into 2007. But it's simple. My favorite indicator, which I had from day one, 46-year lag on the birth index, which I have to modify for immigration, but I can do that. It's a little more complicated. In 46 years is the average peak in spending of the average person, okay? Simple statistic, and that's what causes booms and busts in our economy every generation. I've been saying this for 30 some years, out in public, books all over the place, and economists still don't accept this. You know how much time I spend looking at government policy? Almost nothing. These guys don't matter, thank God. Somebody say, well, yeah, Bitcoin's a great innovation. How can we have a downturn? The Great Depression was basically the growth boom of the whole auto and electrical industries, the biggest thing back there in history, finally taking a shakeout, as any industry does. You get 40 companies come in, auto companies, and then they fight into the greater markets of the roaring 20s, and then get the Great Depression and the downturn, and it shakes down to 3. That's part of the cycle. It wasn't a mistake. Great Depression wasn't a mistake. The bigger you let the bubble get, and the way you limit that is not letting debt and lending go crazy, but you're always going to have debt in any boom, and debts are always going to fail to some degree. It's just a matter of degrees. So these cycles are more important than this. I don't care that Trump just got elected. Yeah, he may give a little boost for a little time. If I were advising him, I'd say, Donald, wait another 4 freaking years, okay? You're coming in at the top of a bubble, like coming in 1999, 2000, and then have this bubble crash. You get blamed for it. I am the most bullish guy on Bitcoin long term. I see Bitcoin, it's going to take a couple decades, becoming the backing for all currencies. So it will be the digital gold. It is not today. It is not widespread enough. It's not accepted enough. It's the most volatile major asset out there today. And my projections, just a simple tracking with Amazon. The last revolution was in the dot-com revolution, 20 some years. So you get 2 of these every 45 years. So that's why, about 20 some years ago, Bitcoin and crypto is a part of the next revolution, okay? So it will not be mature until the late 2030s, early 2040s. And at that point, Bitcoin could be worth roughly 800,000 to $1 million a coin. And at that level, it would be worth worth more than all the gold in the world, and it would be something that could continue to grow with a digital economy, and gold used to grow with a material economy. So this is the new gold. It's not ready to be it yet. It does have to grow and prove itself. There is going to be no talk of a strategic reserve in Bitcoin. When it crashes, I think it's going to go back down to the last low, 16,000. When it crashes that much, anybody use that to back anything? So again, though, it's the only thing that is digital. It is limited even more than gold to keep that kind of durable value over time. So it is the perfect standard for a global economy. You can't tie it to the US dollar or the Chinese yuan or something. That is not great. What I think the biggest thing is going to lay the ground for this Bitcoin being eventually the universal standard is this crash is going to be substantial, and people are going to realize you can't just let governments print money like crazy. And if you have Bitcoin as a standard, like gold used to be, then that would limit countries from doing that. Of course, there's going to be some other regulations, but that's going to be the big lesson out of this is that, everybody watches these governments just print money. In the back of their mind, they go, well, that can't be true, but it's been working for 16 years now since 2009. So people actually think, well, and they look at me as the crazy guy because I'm saying, no, this will not stand. The biggest crash in history was when the greatest industries back then simply took their shakeout in the middle of their upcycle. Those things were growing from 1900 to 1970. In the middle of that, you had the Great Depression. Every business cycle has a shakeout in the middle where the leaders are narrowed down and you go into the maturity boom, the last part of it, the last phase of it, which is like the 50s and 60s in the economy. So this is all natural cycles. Everybody's, confused now, thinking now we're on a road to prosperity forever. It's going to crash and people are going to go, oh my God, and cryptocurrencies are bullshit and blah, 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 blah. And they're just going to be confused. This stuff is all going according to the cycle. And each cycle is different. And one of the things I stress to long-term investors, there is no long-term portfolio. There are booms and busts every generation, 26 years up, 14 years down on average. Stocks do very well in those booms, and they're a horrible place to sit, like from 1968 to 82, when they lost 70% of their value adjusted for inflation. Over 14 years, imagine you were retiring then. Depending on your portfolio, it is going down your whole retirement until you die. So you need to understand these cycles. And real estate's the best sector because real estate has all these sectors. There's always something booming in real estate, although overall spending in real estate peaks at 42 with the trade-up home of families. There's the vacation homes after that. There's the retirement home, blah, blah, blah. Look at the stock market. Look at the NASDAQ or QQQ, NASDAQ 100, from March 2009 bottom up till the recent top. And you look at that chart and you compare it to past booms. If you don't think that's a bubble, then you're an idiot. You're blind and you just don't want to see it. Because my problem is I can't compare it to the past bubbles. It's so big and long, okay? Bubbles burst, absolutely no exceptions in history. It's a good thing for this bubble to burst. It has allowed these 40,000 crypto entities to grow, launch that would never even gotten a chance in another economy. It's going to shake down to the ones that really work. And they're going to change the world, especially in financial services and investment. And why is that important? And I've studied history all the way back 10,000 years of human civilization, more in depth than most professors, okay? This is the first time in history. First, we got the middle class in the last century from Henry Ford and the assembly line, most important invention in history up until that. Now, that middle class is becoming affluent around the world, more than middle class, and they will be the first broad groups of people to be investing for retirement and having a substantial amount of money in investments for retiring and living not to be to 80, they're going to live to be 100 and 120 down the road, okay? All of this stuff makes financial services more important than ever, and Bitcoin and crypto is coming at a time where it can restructure that entire industry to be far more efficient and far more accessible to everybody.